ExamPrep.School. Vermont Producers Bail Bond Insurance Exam, exam code SERIES 14-35. There are 6 practice exams in this series. This video covers Practice Exam 1. The first 20 questions are free. In this video, we will be covering the following major categories for Practice Exam 1. Bail bond principles and practices, insurance regulation, the legal framework. Let's walk through the format. I'll read each question and its choices. Let's get started. Question 1. Under Vermont law, to qualify for a resident bail bond producer license, an applicant must complete how many hours of bail bond-specific pre-licensing education? A. 6 hours. B. 12 hours. C. 8 hours. D. 15 hours. A countdown circle appears in the top right. Once it completes, the answer is revealed. You can pause at any time if you'd like longer to think. If you'd like additional practice covering more topics, see the description for our book. The correct answer is C. The correct answer is 8 hours because Vermont statutes mandate 8 hours of bail bond-specific pre-licensing education for resident producer applicants. Reason A is not correct. 6 hours is too few. Vermont law specifies a longer education requirement. Reason B is not correct. 12 hours exceeds the state's specified education requirement for resident applicants. Reason D is not correct. 15 hours is more than what Vermont statutes require for bail bond education. Question 2. Under Vermont law, a non-resident bail bond producer license may be issued if the home state's licensing requirements are Vermont's requirements. A. Identical to. B. More stringent than. C. Substantially equivalent to. D. Less stringent than. The correct answer is C. The correct answer is substantially equivalent to because Vermont's reciprocity rules require home state standards to match Vermont's in substance, not necessarily in every detail. Reason A is not correct. Identical to is incorrect because exact match is not required. Only substantial equivalence is mandated. Reason B is not correct. More stringent than is incorrect. Vermont does not demand higher standards for reciprocity than its own. Reason D is not correct. Less stringent than is incorrect because home state requirements must be at least as rigorous as Vermont's. Question 3. Morgan, age 17 and already licensed as a security guard in Vermont, has completed the pre-licensing course and passed the exam for a bail bond producer license. Morgan's 18th birthday is 2 months away. Under Vermont statute, at what minimum age is Morgan eligible to receive a bail bond producer license? A. 17 years old. B. 18 years old. C. 19 years old. D. 21 years old. The correct answer is B. This option is correct because Vermont law requires applicants to be at least 18 years old before a bail bond producer license may be issued, regardless of completion of educational or exam requirements. Reason A is not correct. The minimum licensing age is higher than 17 under Vermont law. Reason C is not correct. Vermont law does not mandate that applicants be at least 19 years old. Reason D is not correct. The statutory age requirement for bail bond producers is below 21 inches, Vermont. Question 4. According to Vermont Title 8, Section 4724, misrepresentation as an unfair trade practice is defined as which of the following? A. Any intentionally false oral or written statement regarding the terms of a surety bond. B. Any fraudulent or negligent misstatement or suppression by a producer of material fact for the purpose of effecting a contract. C. Any willful false statement, misstatement, or omission of material fact made to an insurer or insured. D. Any inaccurate quote provided to a principal about premium rates. The correct answer is C. The statute defines misrepresentation as any willful false statement, misstatement, or omission of material fact. This broad definition covers both affirmative misstatements and failures to disclose material information. Reason A is not correct. Limits misrepresentation only to bond terms and fails to include omissions of material fact. Reason B is not correct. Erroneously includes negligent acts, whereas the statute specifies willful conduct. Reason D is not correct. Refers to an inaccurate quote rather than the broader statutory definition of material misstatements or omissions. Question 5. Which of the following best describes false advertising of surety contract terms prohibited under Vermont insurance law? A. Distributing general market information to potential clients. B. Quoting premium rates without including state taxes and assessments. C. Advertising a reduced commission rate not currently offered. D. Claiming a bond provides coverage for events specifically excluded by the contract. The correct answer is D. False advertising of contract terms occurs when coverage benefits, conditions, or exclusions are misrepresented. Claiming coverage for excluded events directly violates the prohibition against untrue or misleading statements about contract terms. Reason A is not correct. General market information is informational and not a statement about specific contract terms. Reason B is not correct. Omitting taxes in a rate quote relates to disclosure requirements, not misrepresentation of contract terms. Reason C is not correct. Commission rates are not contract terms and do not constitute misrepresentation of coverage conditions. Question 6. A Vermont bail bond producer gives a defendant a $50 restaurant gift card and applies a $100 credit toward the premium after posting bond as an incentive for future business. Under Vermont insurance regulation, which best describes the producer's practice? A. Permitted because the credit occurs after bond issuance. B. An illegal rebate under state unfair trade laws. C. Allowed if the insurer approves the incentive. D. Treated as a permissible premium discount. The correct answer is B. The practice is an illegal rebate because Vermont law prohibits any return of premium or special inducement in connection with bail bond premiums, regardless of timing or insurer approval. Reason A is not correct. Rebates are prohibited regardless of whether they occur before or after bond issuance. Reason C is not correct. Insurer approval does not override the state's blanket prohibition on rebates. Reason D is not correct. A discount at the point of sale differs from a rebate. Post-issuance credits are unlawful rebates. Question 7. Under Vermont law, a licensed bail bond producer must establish and maintain a trust account that A. Is kept separate from the producer's general funds and used exclusively for bail bond premiums and collateral. B. Is insured by a state guarantee fund for up to $250,000 per depositor. C. Requires that earned interest be remitted annually to the state's general fund. D. May be held in out-of-state financial institutions upon commissioner approval. The correct answer is A. Maintaining a trust account separate from general funds and dedicated solely to bail bond premiums and collateral protects client assets and meets statutory fiduciary requirements. Reason B is not correct. There is no state guarantee fund requirement. Standard federal deposit insurance applies but is not specified by statute for bail bond trust accounts. Reason C is not correct. Statutes do not direct interest to the state general fund. Any interest typically belongs to the clients or must be handled according to regulatory guidance. Reason D is not correct. Trust accounts must be held in approved Vermont financial institutions. Out-of-state accounts are not permitted under the regulation. Question 8. A bail bond producer deposits a $5,000 premium check for a surety bond into a premium trust account. 2 days later, the producer receives an insurer's invoice for $4,800 for the policy premium. Under Vermont regulations, which withdrawal from the premium trust account is permitted? A. Pay the insurer $4,800 to settle the policy premium invoice. B. Withdraw $3,000 to cover the producer's office rent. C. Withdraw $500 to pay outstanding employee wages. D. Withdraw $2,500 to repay a personal short-term loan. The correct answer is A. Paying the insurer the exact policy premium from the premium trust account is the only authorized use of deposited premium funds under Vermont's trust account regulations. Reason B is not correct. Funds in a premium trust account may not be used for overhead expenses such as office rent. Reason C is not correct. Premium trust funds cannot be diverted to cover payroll or other employee obligations. Reason D is not correct. Repaying personal loans is not a permitted use of premium trust account funds. Question 9. Under 18 U.S.C. section 1033, which of the following activities would require an individual convicted of a felony to obtain a written federal waiver before performing it? A. Negotiating fidelity bond coverage on behalf of an FDIC-insured bank. B. Adjusting homeowners' insurance claims for an independent adjuster firm. C. Selling travel insurance through an online insurer without bank affiliation. D. Underwriting auto insurance for a mutual insurer, independent of banking operations. The correct answer is A. Federal law prohibits felons from engaging in insurance activities for FDIC-insured institutions without a waiver, and negotiating fidelity bond coverage on behalf of an FDIC-insured bank is a covered activity. Reason B is not correct. Adjusting homeowners' claims for an independent firm is not tied to FDIC-insured depository institutions, and thus does not trigger the waiver requirement. Reason C is not correct. Selling travel insurance for an insurer not affiliated with a bank falls outside the FDIC-related prohibition. Reason D is not correct. Underwriting auto policies for a mutual insurer unaffiliated with banking operations is not covered by the FDIC insurance restriction. Question 10. Under federal statute 18 U.S.C. section 1033, which of the following activities is excluded from the definition of engaging in the business of insurance and therefore not barred for a person convicted of a felony? A. Soliciting insurance contracts on behalf of an insurer. B. Negotiating coverage terms for prospective policyholders. C. Preparing financial audits of an insurer. D. Adjusting policyholder claims after a loss. The correct answer is C. Preparing financial audits is an accounting function not listed among negotiation, solicitation, procurement, adjustment, or service of insurance, so it falls outside the disqualification provisions. Reason A is not correct. Soliciting insurance contracts is explicitly defined as engaging in the business of insurance, and thus covered by the disqualification provisions. Reason B is not correct. Negotiating coverage terms is a core insurance activity under the statute and is not excluded. Reason D is not correct. Adjusting policyholder claims is expressly included in the statutory definition of insurance business. Question 11. In a surety contract, what best defines express authority? A. Authority granted through conduct or performance by the parties, rather than a written agreement. B. Authority established by industry usage or practices recognized by courts. C. Authority created when third parties reasonably rely on the principal's representations. D. Authority explicitly conferred on the surety in the written contract with the principal. The correct answer is D. Express authority is authority explicitly conferred in the written agreement between the principal and the surety, distinguishing it from implied or apparent authority. Reason A is not correct. This describes implied authority, which arises from conduct rather than explicit terms. Reason B is not correct. This refers to implied authority based on trade usage, not express contractual terms. Reason C is not correct. This characterizes apparent authority, which depends on third-party reliance, not express grant. Question 12. A bail producer with express authority to execute and countersign bail bonds routinely issues short-form powers of attorney to a local attorney-in-fact to facilitate bond release procedures. The insurer has never explicitly approved these delegations, yet the practice is consistently used to obtain necessary signatures. Under agency law, which justification best explains the producer's ability to issue these powers of attorney? A. Apparent authority because third parties reasonably assume the producer can delegate signature functions. B. Express authority since the original contract granting bond execution power implicitly covered delegation. C. Ratification because the insurer's silence after learning of the practice validates the delegations. D. Implied authority because issuing such instruments is customary and necessary to perform express agent duties. The correct answer is D. This option is correct because agency law recognizes that an agent may perform acts incidental to their express authority, including issuing powers of attorney when necessary to fulfill duties. Such incidental acts constitute implied authority even without explicit principal approval. Reason A is not correct. Apparent authority arises from a principal's actions that lead third parties to believe an agent is authorized. But here the issue is the producer's own customary practice rather than third-party belief. Reason B is not correct. Express authority refers to permissions explicitly stated in the agency agreement, but the contract did not specifically authorize delegation via power of attorney. Reason C is not correct. Ratification requires the principal's knowledge and subsequent approval of an unauthorized act, but the insurer never learned of or approved these delegations. Question 13. Which of the following elements is required for a bail bond contract to be enforceable? A. Express power of attorney granting authority to the surety. B. Valid consideration provided by the indemnitor. C. Recordation of the bond with the court clerk. D. Judicial approval signature on the contract. The correct answer is B. The correct answer is valid consideration provided by the indemnitor, because every enforceable bail bond contract must include consideration in the form of a premium or obligation from the indemnitor to the surety. Reason A is not correct. An express power of attorney is not a mandatory element. It may be used to delegate authority but is not required for enforceability. Reason C is not correct. Recording the bond with the court clerk is a filing procedure and not an essential contractual element. Reason D is not correct. A judicial signature is not required on the contract itself. The bond's enforceability stems from statutory authority and consideration rather than a judge's sign-off. Question 14. A bail agent sends a written offer of a $10,000 bond to an indemnitor on June 1st, stating the acceptance must be mailed by close of business on that date. The indemnitor signs and mails the application on June 1st, but the agent does not receive it until June 3rd. Under Vermont contract law, what is the status of the contract? A. The offer expired because the agent did not receive the acceptance by June 1st. B. Acceptance is effective only upon the agent's receipt on June 3rd. C. The contract is void because the acceptance arrived after the deadline. D. Acceptance became effective when the indemnitor mailed the application on June 1st. The correct answer is D. Under Vermont law employing the mailbox rule, an acceptance properly mailed within the time specified is effective upon dispatch, even if the offeror does not receive it until later. Reason A is not correct. The mailbox rule makes acceptance effective upon dispatch, so the offer did not expire despite late receipt. Reason B is not correct. Contract law here follows the dispatch principle, not a receipt rule, so acceptance is not tied to when the agent receives it. Reason C is not correct. A contract formed on dispatch if mailed by the deadline. so it is not void due to the later arrival. Question 15. Which of the following matters falls under the original jurisdiction of the Vermont District Courts? A. Criminal proceedings for misdemeanor traffic violations. B. Civil action seeking damages in excess of $30,000. C. Felony trials for homicide cases. D. Appeals from the Vermont Superior Court. The correct answer is A. The correct answer describes a case type that district courts handle initially. Misdemeanor traffic violations originate in district courts. The other options fall outside this jurisdiction because civil actions above the statutory threshold proceed elsewhere. Felony trials begin in superior courts and appeals are handled by higher courts. Reason B is not correct. Civil actions with damages exceeding $30,000 surpass the district court's monetary limit and proceed to superior court. Reason C is not correct. Felony homicide trials are conducted in superior court, not district court. Reason D is not correct. Appeals are heard by higher courts, not at the district court level. Question 16. Under a bail bond agreement, what is a principal obligation of the surety? A. Cover all legal fees incurred by the defendant. B. Ensure the defendant appears at all required court proceedings. C. Provide legal representation for the defendant at trial. D. Issue a new bond if the defendant misses a court date. The correct answer is B. The correct answer is the duty to guarantee the defendant's appearance at scheduled court hearings, ensuring that the bond remains in force only if the principal complies with appearance requirements. Reason A is not correct. Covering legal fees is not the surety's responsibility and lies outside the bond obligations. Reason C is not correct. Providing a defense attorney falls to the defendant or public defender, not to the surety. Reason D is not correct. The surety is not obligated to issue a new bond. Its obligation is to surrender collateral or pay the bond upon default, not to reissue. Question 17. Regarding an indemnitor's liability in a bail bond agreement, which of the following best describes the indemnitor's financial responsibility if the principal defaults? A. Responsible solely for the bail bond premium paid at the inception of the bond. B. Liable for the full bond amount, plus any incurred costs and fees. C. Required only to surrender any collateral pledged to secure the bond. D. Obligated to cover half of the bond amount and associated court costs. The correct answer is B. The correct answer is that the indemnitor must indemnify the surety for the full bond obligation and any related expenses if the principal fails to appear or breaches bond conditions. Reason A is not correct. Indemnitors are liable for more than just the premium. They cover the full obligation under default. Reason C is not correct. Collateral surrender is part of securing the bond, but indemnitors are also liable for the unpaid bond amount and costs. Reason D is not correct. Liability is not limited to a fraction. The indemnitor must cover the total bond amount plus additional fees. Question 18. A defendant fails to appear at a scheduled Vermont court hearing, triggering a forfeiture order against the bail bond. The state, acting as obligé, seeks to recover the forfeited amount posted by the surety. Under Vermont statute, which remedy is available to the obligé? A. Demand the court set aside the forfeiture and issue a new bail schedule. B. Request an order to reinstate the bond without additional collateral. C. Seek punitive damages against the surety for breach of contract. D. Petition for a civil judgment against the surety's collateral in the amount of the forfeiture. The correct answer is D. The correct answer is to petition for a civil judgment, as Vermont law grants the obligé the right to obtain a judgment against the surety's collateral for the forfeited amount. Reason A is not correct. This choice is incorrect because the obligé cannot demand vacating the forfeiture and immediate rebail on the same bond. Reason B is not correct. This choice is incorrect because reinstating without new collateral is not permitted once forfeiture is entered. Reason C is not correct. This choice is incorrect because punitive damages are not provided against sureties under Vermont bail forfeiture statutes. Question 19. A newly chartered surety insurer plans to underwrite bail bonds in Vermont. The insurer's initial paid-in capital plus surplus must meet state requirements. Under Vermont law, what is the minimum capital and surplus required? A. $100,000. B. $250,000. C. $500,000. D. $1 million. The correct answer is B. The correct answer is $250,000, as Vermont statute requires a surety insurer writing bail bonds to maintain at least $250,000 in paid-in capital and surplus. Reason A is not correct. This choice is incorrect because $100,000 is below the Vermont statutory minimum for bail bond insurers. Reason C is not correct. This choice is incorrect because $500,000 exceeds the minimum requirement. The law specifies a lower amount. Reason D is not correct. This choice is incorrect because $1 million is not the minimum requirement under Vermont bail bond statutes. Question 20. A licensed Vermont bail producer holds a statutory power of attorney from a surety insurer to execute bail bonds. Before signing the bond form, what must the producer confirm and attach to the instrument? A. A notarized indemnitor agreement. B. A copy of the insurer's certificate of authority. C. The statutory power of attorney authorizing execution. D. Proof of collateral held by the producer. The correct answer is C. The correct answer is the statutory power of attorney, because Vermont law requires the producer to confirm and attach the insurer's power of attorney authorization when executing a surety bond. Reason A is not correct. This choice is incorrect because an indemnitor agreement is separate and not required to be attached at bond execution. Reason B is not correct. This choice is incorrect because the certificate of authority need not be attached to each bond form. Reason D is not correct. This choice is incorrect because proof of collateral held is not required at execution under Vermont statute. Enjoyed this practice test? Tap like, hit subscribe, and share it with a classmate. Got a question we should tweak? Comment below. We read them all. Find full practice exam books in the description or at ExamPrep.School.